Welcome to the Ultimate Landscape CEO podcast. Today we have an editor-in-chief instead of a CEO, Scott Hollister from Landscape Management Magazine. Scott and I dive into the LM150, the top 150 companies based on self-reported revenue in the landscape industry. And the LM150, they do a good job because they have multiple segmentation when you read the story in the magazine and the edition that covers the LM150. And so with Scott, we dive into his analysis based on what they've covered here. And then I share my analysis, and I've done some surprise analysis that I surprised Scott with. I compared the original LM150 from 2009 and compared that with the 2026. And so that's kind of fun. But really, some big changes have happened. And so we talk about those. We talk about the impact of private equity. We dive in a little bit to the ups and downs of private equity, and I'll explain exactly what I mean during this podcast. We name names. Scott talks about some future changes they're going to do to the LM150. And so really, there's a lot here. I hope you enjoy it. Scott and Landscape Management will also be at our Summer Growth Summit. They've been there for many years now, and they are our number one media sponsor. So August 18 to 20th in Detroit, Scott will be there as well. We will be visiting Great Lakes Landscape Design and Troy Clogg Landscape Associates, two very different companies, different approaches to the market. So you're going to get twice the learning. It's not too late to get tickets. I'll put a link in the show notes. Hope to see you there. And so now let's jump in. I'm going to invite Scott in, and we're going to get after it. Scott Hollister, welcome to my podcast.
Thanks, Jeffrey. Really appreciate it. I guess I could say a long-time listener, first-time caller, like they do on sports radio, but glad to be here today.
Excellent. Hopefully there won't be any yelling and screaming.
That's right. Well, depends on what sports topics we get into. But
I just listened to, what's his name? Somebody who has a Barstool podcast or Barstool radio show. Oh my God, that guy's a yeller and a screamer and everything else.
You got to turn the volume down on those.
We will be polite on this show.
Yes, we will.
So we're talking about the LM150, lots to talk about. Let me just hand the mic over to you and kick us off with this.
Yeah, it's. I think everyone's aware of what the LM150 is. It's our annual ranking of the largest revenue-generating firms in the industry. Runs in every June issue of the magazine, and there's obviously digital components as well. So I'm imagining most of the listeners have seen the list. Another banner year, at least based on the numbers generated by our work on this. Nearly over $22 billion of combined annual revenue among the 150 companies on the list. That represents an 18% growth over 2024. 2024 was I should actually say the way we do the list. So the list is the 2026 list, but it is based off the previous year's numbers. So that would be the 2025 list, or 2025 numbers, excuse me.
Makes sense.
2025 list was the first time our list had taken those total revenues over $20 billion. So it's kind of a notable threshold. The industry stayed there based on where we were. Among those 150 companies, we had 33 companies that reported growth year over year of more than 20%, including, I think we had 4 companies that had over 100% growth. Now, that was obviously fueled by acquisitions, and among all 4 of those companies, private equity investment into their operations, which fueled obviously acquisitions that they made. But it was another banner year. It wasn't all great news. We had a number of companies that remained on the list that had been on the past that reported a slight step back in annual revenue. In studying some of those, some of them were a reinvestment into the business where they spent more capital than they might normally in a year. And so they ate a little bit into their revenue to kind of build a foundation for themselves going forward. A few of them were just, it was a tough year. There were obviously challenges that the entire industry faced over many familiar areas, whether that's labor, whether that's the cost of fuel, and supporting a fleet of equipment like landscape contractors have to do. So there were signs that the challenges of the past year did have some impact. But overall, I think all of us at LM were really optimistic about what this year's list revealed. A lot of the old standbys are at the top of the list and names that would be familiar to everyone. But on the other end of the spectrum, we had several new companies that were able to break into the list, and that threshold is typically about an annual revenue of in the $20 to $23 million range. That fluctuates a little bit, but that's where it's been the last 3 years. So overall, I think the numbers that we saw painted a really positive picture of the industry. One that's not without challenges, but one that I think everyone can be pretty pleased with.
Excellent. Did anything surprise you? Maybe you just shared that surprise, but
Um,
what
uh,
surprised you?
yeah, I would say among the top 10 companies, um, there were a handful, and all of those companies, if you look at the top 10 of the list, and they're the Brightviews, the Marianis, companies like that, Davy Tree, um, all of those were over 500 million in annual revenue. Not all of them experienced growth in calendar year 2025. There were several that were flat, several others that were reported a reduction in annual revenue, and we dig a little bit into that. Those companies didn't report directly. Kind of what I was discussing a little bit earlier about was that step back or that flat revenue a product of investment in the business that they might not normally do? Was it a product of a tough year in regionally in certain regions that they service? There
Well,
is some.
I can give you some insight into that. Private equity requires or needs organic growth along with acquisition growth in order to create cash flow and return on investment. And so if you're only growing by acquisition and not organic, you're probably in trouble, so to speak, as private equity. So if they're on the top and they're shrinking, that means the organic growth is not there. So that probably speaks to some deeper issues going on there.
Yeah, and I think there is an examination, I would imagine, among all those companies that are whether they're private equity backed or not. Can they grow organically in their markets that they serve? Is an expansion or a change in services a path toward increased organic growth?
It would make some interesting follow up articles by you if you can get them to talk honestly, because they need that organic growth to make the whole concept of private equity worthwhile, right? We buy the company, we
Right.
grow it faster, not we shrink it.
Right. Right. We do consider that. We consider every year also, additional questions that we can ask on the form. We're trying to tap into, typically we will get in the neighborhood of 200 applications for the LM150 every year. Some of those require no arm twisting at all. Others of those require us to kind of push and prod, and you will see some if you look through the list and the specifics of the list. There are a handful where we that may have reported numbers last year but declined to report numbers this year. We will include them for one additional year as long as their previous year's application included projections on growth for the coming year, things like that. So, for example, if they submitted something for 2025 but didn't submit something for the 2026 list, if those 2025 numbers represented projections of growth, of staff size, of things of that nature, we will include them for one additional year. Past that, I think it's pretty clear that the numbers might get a little fishy, and it's our intent, obviously, to present paint as complete a picture as we can. We feel we can still do that with 1 year, but you get much past that and you can't do that. So the other thing that might pleasantly surprise, I think, is we talk a lot about the top end numbers, is the bottom end, and that floor. That floor continues to rise as well, and it's on pace with the overall list. We're typically we compared the last 25 companies over the last few years, and that floor has continued to move about 10 to 15%. So maybe a little bit off the overall total, but I think that also shows is a good sign of health of the industry, that the companies that are in that 20 to, say, if we're considering 25, you might be in the 20 million to 30 to 40 million dollar revenue range. That has continued to bump up a little bit. I think bodes well for companies that are maybe they're not new in the space, but they're on their own growth journey. And
I actually think it's good news that they're growing slower. I know that might sound ironic, but to me, what that means is, A, they're probably not using private equity, so it makes sense. They're not doing acquisition with OPM, other people's money.
yeah,
But what it also means is that the average Joe landscaper company has a chance to get in the list, right? It's not speeding out of grasp, so to speak. So
yeah,
I think that's a positive. Hey, let me
I would
ask you.
agree.
I really like about your list that you have the different segments, right? You've got the residential, commercial, government, mowing and maintenance, DB, turf, irrigation, and then you do it by region. So I love all that. I think that's really excellent. Do you have plans to do a segment of PE versus organic only type companies? Or
We,
actually, whether it's acquisition or not, I don't care, but PE backed versus private companies.
we do, and that's something that we talked about in advance of this year, and couldn't wrap our heads around exactly how we wanted to do that. So it's definitely on our radar because we think it's important. As we've already discussed, there are certain companies that may. I mentioned those companies that had triple digit growth between 2024 and 2025. All of them were private equity backed. I think if you had a company that had 1 year organic growth of 102%, that would be a massive story. And you'd really, and I know our team would really want to dig into, okay, how did you manage to pull that off in a 12 month period? So the introduction of private equity money in the industry has become so notable that we think it's important to do that. So we will likely introduce questions within the application form to see if a company is backed by private equity or not. That will allow us to present other lists and identify who is growing in one way and who is growing in another way. And it also opens up an additional avenue, as you sort of discuss those companies at the bottom, an additional way to be recognized if they are in their company journey at the point where they are growing only organically, and that's their strategy, and that is how they are managing their business, and they're having success at that. That's something we definitely want to acknowledge in the pages of LM. So yes, to answer your question, we're definitely considering that. We're also looking at some additional questions that we can ask that might get beyond just annual revenue. It's a fine line you have to walk when you're conducting surveys, I guess, or asking questions of this much. How much is a business owner willing to report to a third party about the internal workings of their business. We acknowledge there's probably several different better ways to report on the health of a business, whether that's profit, annual profit versus annual revenue, or whatever the case might be. The more in depth you get into that, the less likely certain business owners will be to, hey, that's proprietary information about my business that I don't feel comfortable revealing. So, bit of a fine line we have to walk there, but we always look at improving the list, asking different questions, taking things in a different path. I know that we're very, very lucky. A predecessor of mine in this role with landscape management, Marisa Palmieri, continues to assist us
Yeah,
in
she's
production
great.
of this. Yeah, the production of this list. She's outstanding. She's helped us in this area for a number of years and is really well versed in the process. And so we work pretty closely with her to chat about improvements to come. And so we're in that phase now. I'm letting her take a breath after the 2026 list is out a little bit. As we head into the fourth quarter of the year, we'll have internal conversations about ways to improve the list, and then typically as we get into the new year is when landscape owners, business owners can start seeing the call for applications, and we'll start to market that and produce that with the mind to get everything done by June.
You know, I had some time to think about my question as well while you were answering it. And I think you could take your existing list and do some manual analysis and pull out the top 25 private companies. I,
Yeah, you
I,
certainly could.
I think all private company owners would love to see, at a minimum, the top 25, just like the way you've done the other segments. And really, you could publish that this year. You could
Yeah,
kind of have a follow up to it. And so let's assume if you're looking at the top 150, there's a lot of PE on that, and certainly at the top. So who are the top 25 privates? That would make an interesting follow up.
yeah, and as you say, that's all publicly available information. Obviously, as these companies forge deals with private equity firms and then begin their process, that's public information that is shared. So we could pretty easily, I'm sure you and I could both go through that list and kind of with about 70 or 80% accuracy on the first try,
I
pick
think
out
so.
pick out who
My,
was that. So
I'm going to give her one more request here. So
all right.
looking through your segments, you have a residential segment, but when you look into it, it has a lot of lawn care, which if I'm a non-lawn care company, I don't really care to compare myself to them. So you really could make two sub lists there, the top 25 lawn care based companies if you want, and then other typical residential, single family residential type
Yeah.
landscape companies.
No, that makes sense, and that probably would be beneficial to I think a reader looking at that list to kind of know, because you're exactly right. If you're a True Green or a U.S. Lawns or companies like that, that's a different ball of wax than gosh,
Makes
even Orion here in my hometown of Kansas City,
yeah,
um, which is on the list. They do they're much more broad based, but they obviously are their foundation is in
lawn,
residential.
in lawn
So
care. Yeah,
yeah, no,
yeah,
that's actually a great
yeah.
suggestion.
Let's see. Let me have a few more questions for you here. So you talk about revenue. It's the easiest one to track. Do you have plans on having a different KPI besides revenue? And I know you already explained it's quite hard to get it consistently accurate and comparable. But any plans on that?
Yeah, much like asking profit questions, we do ask that, and I will tell you, I think one of the avenues we can take is there's among those companies, there's many good friends of the magazine on
Yeah.
that list who would be open to a phone call where we said, hey, what would you be as a business owner, as a manager of a large firm, what numbers would you be comfortable including in an application that might make us I won't say more accurate, but a more complete picture on the overall financial health of the industry. So that is something I think we would be interested in asking, and it's just sort of towing that line one more, and then seeing what the reaction is, towing another line, and with the idea of just finding that balance of presenting a complete list with presenting the most accurate picture of the financial health of the business that we
Do,
can.
does LM do a best place to work? And have
I
you
will.
thought about that?
We don't, but we have. We have a feature, and we're actually working on it right now that sort of spun off of the LM150. We call it Rising Stars right now, and basically, it was born out of the ideas that we had. Our team was kind of looking through the leftovers from last year's list. Actually, it might have been the year prior when this idea first came up. But there were a lot of companies that didn't make that 150 threshold. We had a collection of 30 or 40 companies that had great years, really grew, and you could see that they were on a trajectory that was noteworthy. But there was that because they were either new in their journey, or had just started to uh, change their operations in a way where growth was something they were really achieving. They didn't reach that $20 million threshold. And we're like, how can we recognize and feature some of the cool stories of up and coming companies in the industry? And so we created the Rising Stars feature.
Mm.
And very similarly, we asked for applications. Um, Sometimes we will have companies you'll see on the LM150 list that will apply for this, and we'll include them. It's less of a ranking and more just a collection of, hey, here are some up and coming companies. We'll do features on a few of them. The numbers aren't broke down quite as in depth as we do for LM150 at this point, but so that was kind of a spinoff for the LM150. Best places to work, a 40 under 40 collection of individuals working for a lot of these companies is something that we've shared, because we think there's some interesting cool stories among that people would be interested in.
You know,
So
you
we're always
you
looking to add and change, and
you
those
could
are,
do a 30 under 30. I have a few clients that are very young,
yeah.
that are just kicking butt. I mean, they are killing it,
Yeah,
and they're
and
and they're
those are
really they're in
awesome.
the 20s.
Yeah, those are awesome stories, and I'll tell you what, man. I am no longer in my 20s, and I will go to various events and see the energy and the vibe and the people that are there. Your Summer Growth Summit last year was an example. I mean, you're just there, and I'm interacting with these people, and they are so enthusiastic, and they are so focused, and they are so dedicated to making themselves better, whether that's through participation in your peer groups, or another peer group, attending industry events, learning from the best in the business. It is pretty impressive. And while I say it on one hand, it does make me feel old. It is energizing to see that interest, that investment. And there are some cool opportunities we could do out there to recognize those up and coming individuals and
Yeah,
the up and coming companies.
yeah, yeah. I like that idea of rising stars as well. So I did some research. This
Okay.
is going to be a bit like, remember that show, This Is Your Life?
Yes. Oh no,
Scott
now you're scaring
Hollister,
me. I don't know where we're going
this this is your life.
here.
And so I looked back at your original 150,
Okay.
and that was in 2009, I think,
That's right.
for the 2008 numbers. And so I have some comparisons of both lists. And so you were hinting at some of them. And so one comparison is, if you look back to 2009, you could get on the list with a $6 million company, roughly. Like the bottom 10 companies were around 6 million. And now the bottom 10 companies are around 20 million, 20, 21, 22. And so, and that growth has been smaller, slow. I mean, that's a lot of growth, but that growth has been slower than at the top, just like you said. And so the bottom has grown, and in definition of, getting out of the 150 has grown, but not as much as the top has. And so if you took inflation, I think I have the inflation number here. Let's see if I did that. If you did inflation, your 6 million would put you at, I don't know, like 10 million or something. I have it somewhere here, but not 20 million. And so it's been real growth. Also, many on that original bottom 10, they're completely gone. They're off the list, mostly because they got consumed.
Yeah.
They got bought up. I was looking at one of the companies there, and let me see if I can find it here. Just bear with me. Maffey Landscape. So they got bought up, and the person who runs Maffey now is a member of one of our peer groups. So he runs it within the larger, actually it's a small PE, but
Right.
within his larger company. And so that's just an example of.
Yeah, and I have looked back at that. I mean, there are companies, gosh, we featured on the cover of the magazine that are either not around anymore or in a different form because of exactly what you talked about. So, as someone who's been in the industry now, the landscape side of the green industry for 3 years, I was interested to see, okay, who have we featured before? What do they look like today? And yeah, it's the change is notable.
Yeah. Also, you sort of hinted at this, but the biggest companies are pulling away from the rest of the industry. So if you go back, the cutoff to get onto your list, it's grown 3.1 times.
Okay.
But the top 20 has grown 4.4 times.
Okay.
And so the list is stretching, and the top are growing faster than at the bottom.
I would assume that's because of, I mean, obviously, the larger you get, the more resources you have, whether that's private equity fueling that would be my suspicion. What do you think on that?
Yeah, it's acquisitions.
Yeah.
100%. I think the big, I'm reading some of my things here, some of my notes here, but clearly the whole industry has changed.
Sure.
Right? Consolidation is the dominant growth strategy, and consolidation has come through the industry. And so it's no longer about just scaling revenue, but it's really about building a platform.
Yeah.
And so I think that's probably the biggest change I see from 2009.
Yeah, and we the cover feature of the last 2 years have featured companies that have gone that route. Shill, now the Shill Landscape Collective, that was the host of your event last year,
Right?
And then the year before we did Blaine Landscaping out of the Raleigh Durham area. Now they've obviously, with private equity backing, have grown in through the Southeast, and for me, exposure to those two companies and getting to talk to both, spend time with Jerry, Kurt and Matt Bland at those companies, really opened my eyes a little bit into the whole introduction of private equity. As I mentioned, I have a long green industry history in terms of publishing, but 3 years into my landscape journey, and that's an aspect of the business I was unfamiliar with before coming over. And so just in trying to learn how that is, how it's come in, why it's come in, how it's impacting businesses, both of those business leaders, the Blands and Jerry Shill, really opened my eyes to kind of how companies are utilizing that money, what their strategies look like. Obviously, Shill's been in the news lately with it's not necessarily a rebrand, but how they are talking about their overall operation as the Landscape Collective. It's super interesting stuff, and it just proves, I guess, that there's more than one way to run a business in this industry.
Well, let me come back to one of our first points. The answer to that is yes, and and no. So Shell has done an excellent job of, yes, they're doing acquisitions, but also maintaining organic growth. And organic growth is a lot cheaper, less expensive, requires less of OPM, other people's money, than acquisition. Acquisition's a lot more expensive. And so they have done it right. And so for those in the industry thinking, easy growth, I'm going to do acquisition, and that's how I'm really going to make it, you really need two growth leaders in your company. You better have a very strong organic marketing and sales machine to make yourself attractive. And even if you look into acquisition, if you take your eye off of that first ball, you'll be in trouble. And I think that's what we're seeing a little bit in the past
Yeah.
couple of years because the economy's been up and down. It's been a little hiccupy, and so if you took your eye off the ball, then you did get into trouble.
Right. A question for you with your peer groups. Do you have members on both on who are just organically growing? Do you have members with who are interested in private equity, and do you try to blend those as they're in their groups so they can have different perspectives on the industry? How do you guys approach that?
That's a great question. By the way, we have about 5 members on the list here.
Okay, great.
Most of ours are organic. So, like I said, if you had a private only list, we'd have a lot more members on that list. So, perhaps selfishly, but also for the industry, I would love to see that private only list. We usually, when one of our clients sells to a PE, they'll stay on for a year. But PEs are really bottom dollar driven. I mean, it just is what it is. There's no there's no way around it. It's like the old what is that? The tarantula and the frog story. You know
Yeah,
that story, right?
yeah,
Um, we do have one new member who's runs a who's brought on as a CEO to run a branch or a company within a PE. And so that's the first time we've had one coming into our environment. Usually they get bought up, and then after a year or two, the PE firm starts to, they go through their math process and say, oh,
yeah,
we need to cut costs,
sure.
especially PE that wants to flip. Now, there are some private roll ups where they don't want to flip. They're looking for a long term place to invest their money. They're going to have a longer term view, and that type of investors would probably really benefit from and actually appreciate our type of community. The PE firm who has to flip every 5 years, they've got a very short term outlook, and they've got to you know cut costs
Yeah,
and grow their little platform or big
yeah.
platform.
It is, and as I've started to dig a little more into the PE world, you do see all those different types. You have some that are making a short term investment. You have others that are making a long term investment, and you even see certain landscape companies go through multiple firms as they change and evolve and are looking for, okay, we've reached a different point. We're looking for something a little bit different than what this firm, and they will either divest or sell to another private equity firm, however that works. And um, so it's kind of on both sides. You see these firms set up and they have their own goals. And then obviously the landscape owners, as long as they're still there, they have their own goals. I know that both Schill and Bland have taken on new PE partners in recent years from
Mm-hmm.
where they started their PE journey.
Sure,
Uh,
Shell
it
just
doesn't
did that
sound like
recently.
that was acrimonious at all. It was just the evolution of the businesses and what they were looking for and what the PE firms were looking for. So
Yeah.
it's a very interesting dynamic, I think, between all
Well,
that.
when you take on a PE, like I said, they have a short time frame, and they probably not probably, and they also want to operate in a certain size. So Shield brought on PE. They wanted to invest and then get an ROI after so many years, and so Shield then recapitalized with somebody who operates at a higher level revenue space, and the initial PE gets their return, and I mean, with that recapitalization, I'm sure other things happened as well that only Jerry could tell you about. And so, maybe we can get him on the podcast to talk
Yeah,
about that.
yeah,
I'm not sure what he's allowed to talk about,
that's
but
that's that's right. That's right. I find it interesting. I think obviously readers find it interesting. Some of our most read, just if you're just looking through like the news stories that we publish either in the print magazine or on our websites, you track those. Some of the most read stories are announcements of either mergers and acquisitions or the introduction of new capital sources for companies and PE. So people are clearly interested in this and respond when they see these headlines. So it's not going away. And as we've talked a little bit, I mean, it opens some doors for us when it comes to the LM150 and different ways that we can now dive into the numbers to paint a bigger, more complete picture of the overall health of the industry. So it's interesting all around.
So your magazine came out with the 150, and you have a lot of different articles. Which article in that edition are you most proud of that you think we should all read?
I'll brag about. I don't want to brag about myself, even though I wrote one of them. But I'll brag about your friend of mine, Seth Jones, the editorial director of the magazine, and Nathan Mader, who's our associate editor. We wrote 3 profiles of stories in that issue. Those I think are really interesting because it gives readers a little more depth into the companies, what powered these companies' growth, and they're different companies. They're all on different paths towards growth. We've talked about Shill, who I wrote the story on Shill. Seth wrote the story on Cleanscapes, and then Saluda Hill was another company that Nathan wrote about. So I found those really interesting because it does allow us to go a little bit deeper. The other thing I find interesting in there is we will ask some open-ended questions on these applications. And over all sorts, biggest opportunities, biggest challenges, key to growth. What are you excited about for the coming year? What are you concerned about? It gives us and the folks that take the time to answer that give us some interesting insights, and we will share those as sort of sidebars throughout the printed magazine. You can also find them online, and we'll just run these quotes from business owners who talk about their own unique challenges. And I think it's a way to just to kind of broaden the story that we're telling about that, other than just the annual revenue growth. And so we like digging into those as well as we move along. And so I would point to those kind of things as just different tracks that we take that kind of make that section kind of live and breathe and hopefully resonate better with readers.
Scott, I really appreciate you coming on the podcast and digging in here. Any final thoughts or anything you want to point to upcoming in your magazine?
Well, number one, thank you for the invitation. Always appreciate it. And as I think, hopefully most people know, you are our longest serving columnist in the pages of LM. So we really deeply appreciate the partnership with you and your team. You got a great crew there.
I have to think about how many editors I have known. Right, you,
probably a lot.
Seth, Marissa, she was awesome.
Yeah, Christina Herrick, you probably worked with as well.
Yeah, but in terms of like managing editor,
yeah.
Who was before Marissa?
Now you're testing my knowledge because I don't think I know that. Marissa was so long, and I actually knew her. In my other life, we were part of a green industry publishing organization, and both of us served on the board of that organization at the same time. So little did I know that we worked together on that organization, but little did I know we would actually work together on the same effort at some point down the line. Right. But as we talked about, we have our Rising Stars feature coming up in the August issue of the magazine. And then we'll hit trade show season here. We have a great partnership with OPEI and Equip Expo, and you'll be helping us out with some sessions. We're doing 10 educational sessions at Equip this year in Louisville. So we'll have a lot of content both in September and October on all aspects of Equip, both obviously the massive exhibit space and trade show and outdoor demo area, and then also what we do from more of a session focus and in the education. And then we roll into our annual summits if there are. We have one in the golf space, but obviously the one that I'm focused on is the LM Growth Summit. So if there are folks out there in the lawn care, the LCO space, applicators, it's really super tailored for them. If they're interested, they should head to the website and just look up the LM Growth Summit. So those are kind of things filling our calendar right now.
And we will see you in Detroit for our
Yes, I
Summer
will
Growth
absolutely
Summit.
be there. Yep. I as a matter of fact, I booked my flights this week, so I am coming to Detroit. Looking forward to it. You've got a couple of great hosts there, so that'll
Yeah,
be
two hosts this year.
yeah,
It's going to be
double host.
excellent.
So
Really good.
that'll be fun. We're looking forward to that.
Scott, I really appreciate your time. Thank you very, very much.
You are welcome. Thank you, Jeffrey.